Hey everybody, Bosch speaking for us. Welcome to the weekly technicals for the majors for Eurodollar, dollar yen, and pound dollar for Feb 18th to Feb 22nd, 2019. Dollar rally reverses. That's really the big question for us on the technical front, as the end of the week saw the dollar rally, which really started strong this week, completely run out of gas, and actually the majors making very interesting turns against it. So the levels in the euro got tested to the downside. We broke the 13 handle, but really held at 1250, and that now becomes a very, very key support level. If this level has held, I'll show you on the shorter term charts, 4 times this week, and it looks like we made a pretty interesting turn here. So if you're playing the technicals, it looks to me like there's a turn in the euro dollar, at least maybe to the 1350s, possibly all the way out to the 1400s. Dollar yen, not as clear, but certainly gave up a little bit of momentum here. The 111 could not hold. We did break out the 110. That was a very, very big breakout. But the problem is, went to 110 to 111 and just couldn't hold the 111s, and now is sliding back. So we'll see where that goes as far as the week progresses. And cable got everything thrown at it. The Brexit story still continues, of course, to dominate the situation, but the market's still essentially making a key technical bet that there'll either going to be a deal or delay, and they keep buying it up underneath the 28 handle. So we'll take a look and see if it can make a rally up to the 30 on a reversal move here. The calendar kind of very quiet this week. We do have UK data at the beginning of the week, which is probably the most major data here, with jobless claims and average weekly earnings. We're actually bearish the data set because labor market conditions appear to have weakened both in manufacturing and services. Certainly the PMI data has been much weaker, although retail data on Friday did surprise to the upside, and that was mildly positive. Then just a smattering of second-tier European data. We have ZEW survey at the front of the week. We have German PPI. We actually have German GDP, I think, at the end of the week. All of this is final data, none of it really material. IFO is going to just express the general malaise in the region, and the CPI data has really not. It's all final data. It really hasn't been very much impactful in the eurozone. The U.S. side really has very little. We have durable goods, Philly Fed, and that's pretty much it. The key U.S. data point will be the FOMC meeting minutes, and here this is actually going to be interesting because the market is certainly pricing in a dovish Fed, and if the Fed meets the market expectation, that's why this whole reversal in the dollar move on Friday could have a little bit of legs, because if the Fed adds salt to the wound by saying, yes, they're very cautious about the optimism and essentially will stay neutral for the next 2 quarters, that certainly provides no help to the dollar and justifies the technical turn that we saw here on Friday. So here's what I'm talking about as far as technical turn. This is the Euro trade dailies. You see a very, very clean doji over here that almost like if it turned green, it would have been a hammer. That certainly suggests that we had exhaustion sell, and now looks to be a buy. Now, of course, this whole pattern gets smashed to smithereens if we take out the lows. If we take out the lows, and more importantly, the true lows here. I mean, there's just one other level that could frustrate the shorts, which is the 1200 level. But generally, this kind of a turn, what you really want to see if you're a long trader, is a move straight through, take out the highs, which is at this point, what are they, 1306? Yeah, I mean, basically, if we close well above the highs on Monday or Tuesday, that's a bullish construct, and it opens up the prospect of us running all the way to the moving average around 13 and a half, maybe even 1400 as a recovery trade. Just want to show you, because this was very interesting this week. There was 4 tests of the 1250 level. I think 1, 2, 3, maybe 3 tests, and it held. That is the bullish structure that you're seeing on the charts here, and that's where you're making the bet that the dollar rally exhausted itself, or the euro collapse kind of sort of exhausted itself. That, of course, is contingent on whatever news flow we're going to get this week. But assuming we don't get any more negative news flow out of the eurozone, this kind of a turn here, on the assumption that the Fed stays muted and that U.S. economy may be slowing down more than the market thinks, and the repricing of U.S. economy, all that kind of provides a nice, smooth, short covering squeeze here in the euro to the upside. Same story in cable. Oops, sorry, let me get rid of this. Same story in cable. It's actually even a more bullish candle here because we have an engulfing candle that took out the prior day's high. So we closed very close to the 29 handle. Would be uber bullish is if we took out, what is the high here? I think it's 29.50. So if we, the second, if Monday, Tuesday, we sort of close above 29.50, that type of a construct certainly shows, first of all, higher low in cable, and a move clearly through and towards the 130. That's going to be essentially a vote of confidence on some sort of a Brexit deal structure as we go forward. We've been here a million times before. This is essentially the disappointment post Theresa May's disastrous negotiation tactics. But in a way, the market is kind of looking at this and seeing the whole bumbling that's going on in the Brexit situation as a positive, not a negative, because it just seems so dire that even if they don't get a deal, they'll get a delay. Like they just will not fall off a cliff coming into March. That, of course, can completely change if they actually do that. And I think ultimately the true litmus test, I've been saying 25, but I guess you could really almost see 26.50. So a takeout of 26.50, which was this was the big buy up, that would be a capitulation of the longs. So we're quite away from there. That would be a very, very ugly print, and it would suggest that yes, hard Brexit is in the cards. But right now, the market is playing that we get a soft Brexit in the cards, higher lows, strong reversal here move, get a couple of more days of continuation. If we get another day of continuation, it'd be very, very bullish structure. And here's the yen, which is the final thing. Sorry, I forgot to take off my notes here. Here's the final thing about the yen that I think is interesting. So longer term, it still looks very much dollar bullish. We're actually above the 20 SMA, still below the 500, sort of, meeting the longer term resistance here. It's natural for us to have paused around this level. But, and this is going to be the key tell here, did we pause or did we reject? A day or two where we can't take out the highs here. Like to me, a bullish dollar yen construct would be a close above the 111s. We can't do this Monday, Tuesday, going into the week. That would just create a greater preponderance of evidence that this is a exhaustion move rather than just a pause. And the 500 actually rejects the trade, and now we come back all the way down. More importantly, what would be really negative is if Monday we actually close, what's this, 109.72? Basically, if we close below 110, that would be below the 20 SMA, would take us out, and it would really frustrate this whole big 110 breakout that the longs had. The longs basically, we've been dying for this 110 breakout for a month and a half already. They got it. They got a little bit of continuation, and if that breaks down to the downside, pulled and pushed by the FOMC minutes, that creates a very negative structure and essentially goes from a nice, slow but steady appreciating move to effectively a distribution top that could then take us all the way back down to 108. So overall, as we enter the week, it really looks like a dollar reversal trade here with euro reversing, pound reversing, yen kind of in a hesitation mode. If we get a day or two of or at least the first day of continuation move in the direction of Friday, that's only going to add to the preponderance of evidence that we seem to have now a dollar reversal in the making. Wish you guys the best luck, the best of trading. Boris Schlossberg, over and out.